Hi everyone, this is Rob Roy of EWO Options, and boy, if you were looking for a classic example of our new AI-based time strategy, you'd have a hard time doing better than recently closed trade ID number 534. This was on stock symbol CCXI. As you can see, it was a long put butterfly, which brings up one question: how do you know which strategy to utilize? And I'll cover that in a minute. You can see the particulars on the rest of the trade. The entry alert was sent out on March 7th. And you take a look at this. First of all, before I look at the chart over here in the reasoning, you can see the CCXI has a high AI score of 80. And our track record has been built on AI scores of 75 and above. So a score of 80 is pretty high. So when you look at the chart, we try to figure out, okay, which strategy would be best. And we have an Excel spreadsheet that mathematically helps pick which of the strategies between a butterfly, a calendar spread, and a diagonal spread. Well, if you're familiar with butterflies, you know there's two kinds: put butterflies and call butterflies. So when you look at this chart, you can see we had a gap down and we had a gap up. And the earnings report here dropped the stock right in between those two gaps at 25. Boy, I haven't seen a much better setup for a butterfly here. Now, for me, in choosing between a put butterfly or a call butterfly, it's, do you think the stock is likely to stay above the midpoint or below? If it's below the midpoint, you might lean towards the put butterfly. If it's above it, you might lean towards the call. But in general terms, the risk graphs are basically the same. So in this case, we went ahead with the put butterfly. So there are the particulars, expecting it to stay in that trading range. You can see the next earnings report is a ways off, so we just want it to stay sideways, and that's what the AI does. It helps us determine if that's likely to occur. Then you can see I posted a comment from the website on March 8th, the next day, giving a little bit more explanation on the position. And then on the exit, we exited on March 25th, and you can see by looking at the chart, boy, the AI was right. We stayed dead sideways, but look what's happening here. We're forming a little bit of a triangle here inside the trading range. So this symmetrical triangle within the trading range could yield a breakout. We don't have to break out of the range, so we could still stay within the wings of the butterfly, but the further you go within a butterfly time-wise and stay dead center, the exponentially more you're going to make. So looking at that triangle, it's like, I think we're just going to go ahead and take this gain. As you can see, it was a pretty nice gain. And if you go back and look at the chart of CCXI, you'll see 2 days later, we did break out of that triangle and above 25. So the exit was pretty spot on. So we generated a 50% return in just 17 days. And I said in the beginning, this is a classic example. Our time frame is right around 21 days on these time strategies, and a 50% return is right in the general percentage return, the average percentage return, if you will, of what we generate on these. So it's a relatively shorter term, generates a nice amount of income. I'd like you to take a look at our time strategy at EWOtrader.com. Hope you found this informative. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.